Hey everyone, Dennis here, and today we're going to be talking about my dividend investing portfolio, nicely named Dividend Dennis. We're also going to be talking about how much money I'm probably going to be needing so that way I can have my dividends paying me monthly to live off of. So we're going to be looking at that. We're going to be seeing how much I got in dividends as well as looking over my portfolio and seeing its performance over the last week or so. So what I want to do first is, of course, kind of just browse over here with the current value on our portfolio. So we're sitting at $18,391. You can see for the day, it didn't end very well. We went into the negative, but honestly, nothing too crazy. And then you can see right over here in the last week, we are actually still down $120. And I think this is really important to show you guys too, right? Like when you see these numbers right here, not everybody shows you guys this. When things are down, people tend to shy away from producing content. And I seriously think that this is honestly a really important part of the process when it comes to investing. Making sure that you stick with it regardless of how the market is actually doing, because I'm in it for a long term. Obviously, if somebody's a day trader or doing some of that, that can have a huge impact. But because I'm a long-term investor, these downturns are really important in the market because for me at least, this is the time when I tend to buy more. Obviously, it's not a lot. So this is just kind of an example, but let me clean this off. So for being down 120 bucks, this is money weighted returns, but overall, it's still a good time to buy for myself since I'm long term. And then when the market drops really significantly, then I buy heck of a lot more too. So let's go ahead and switch over to the month. So you can see for the month, we're actually positive $684.13, $46 of which has been earned dividends. And then if we go over here to the quarter, you can see up $1,600.11, almost $90 in earned dividends. And then if we go to the year, you can see here for the year, we're up almost $3,000, which almost $190 of that has been earned dividends. Now, earned dividends, some of that has not accumulated into the account just yet. That is just something that will be coming as well too. So just something to keep in mind. And then for our all-time, we're just a tad bit over $3,000. Now, if you're somebody who's looking at this number and being like, wow, that's a lot of gains, and that's a huge portfolio, I always like to share with the audience, like, check this out. Back in January of 2019, I had $100 in this account. And I was just investing slowly and slowly over time, trying to figure out what I wanted to do, how I wanted to invest. And then once I started figuring things out, I started investing more and more every single week. And then when the market went down in early 2020, I really started doubling down myself as far as what I was investing in. And then you could just see the account start growing, felt more comfortable, started putting in a really good amount every single month. And then you just see this going up further and further. So don't be discouraged by seeing larger accounts, something like this, because I started out much, much lower as well. And that's okay. If you don't have a lot of money to start with investing, like, don't freak out. Like, you can get started. Let's go to my activities here. And you can see here. So I go back to my original date here, January 23rd, 2019. I put in $100. Not a lot. I bought 3 stocks and that was it. And then if I scroll through, you can see that like I was putting in $10, just small dollar amounts, nothing too crazy, because it was just all about getting the behaviors down as far as making sure that I was investing every single time. Let me jump in here a little bit closer for you guys. Now, I said that this is the money weighted return. So for those who are very curious, if you want to know what the unrealized gains are, this is essentially not including any dividends earned or anything that I've sold for a profit and then reinvested. This is just unrealized with the current stocks that I have, and that is $2,424, which is about 15% gain. So that's not bad. Obviously, we're in it for long term, so we have a lot more to go. And I currently have 28 positions in this portfolio as well, too. So we're chugging forward, we're moving ahead. And like I said, we are all about the long term. So we're going to be looking at our dividends and what we've earned just for this last week, and then also start, calculating how much are we going to need in dividends over the next, little while to be able to build up so we can have, the big goal for a lot of people is the $1,000 a month. You hear that a lot from a lot of creators, and that's great. This is an awesome goal to reach. because it's huge, right? Getting $1,000 a month that you don't have to work for. But I'm thinking even longer term. I'm thinking, somewhere around 10,000 a month dividends, maybe more. And obviously that's going to take a lot of work and a lot of effort, but I'm going to show you guys exactly how this is going to be feasible for me. Obviously, I'm going to have the 1K as a goal, but the 10K is like the bigger goal for myself, plus more, right? 15, maybe even 20,000 a month. Now, before I show you guys how I'm going to get to those numbers, what I want to do is just mention for you guys really quick, if you have a student loans, check out my friends at Earnest. So they are a company that helps you refinance your student loans, and you could do it typically within less than 2 minutes to get your rates. Now, the really important thing about that is if you can lower your rates, that is more money in your pocket to either invest with or do anything else you want with. And if you use my link in the show notes down below, that does not only support me, but it also gives you a nice little bonus as well. So make sure you check that out in the show notes down below. But with that being said, let's go ahead and hop back over to pretty much what we're going to be talking about today, which is all dividend stuff, because that's what we love to do, hence the name Dividend Dentist here on my portfolio. So what we're going to look at first is how much we got paid thus far in the month that we're currently in. So we go into my activities feed. You can see I've done a couple purchases here, as well as earning some dividends. So let's go ahead and go into our dividends here. So you can see here we got actually quite a few payouts thus far for the month, and we still have more to go. And I'm going to show you guys what the total has equaled out to, kind of where I'm earning every single month on average this year, and then kind of breaking down a few other really cool numbers. So on the first of the month, I actually got paid out 3 different times. The first was with Aflac. We got paid out a nice $4.45, and Aflac actually increased their dividend by over 17% for the following payout, which is incredible. Dividend increases are something that people don't talk a lot about, but is really important to being able to hit that $1,000 or $10,000 a month goal. So keep that in mind when it's, talking about dividends and getting those earned, because I do love talking about increases. So something like this is massive. So it didn't include it in this payout here, but the following payout, I will get 17% more on my dividend payout. Now, next up after that, we see here we have Pfizer. So Pfizer paid us a total of $2.28. We also have Visa right over here paying us out 51 cents. And just a heads up for anybody that is investing and is doing fractional shares like I am with M1 Finance, because this is the platform, by the way, that I use, M1 Finance. They allow you to do fractional shares, so you can own small companies and get small fractions of stocks and dividends when they pay out. And the important thing about that is that when I first got paid out dividends, I was getting, I think the first dividend I ever got was like 3 cents from Microsoft. So that was like the very first dividend I've ever gotten. But then as time went on, it kept increasing and growing. So for me, I love fractional shares, and getting started small is totally okay. Like I mentioned, it's all about the long-term stuff with you. And if you are curious or want to get started with M1 Finance, I will have them in the show notes down below too. Again, helps support out the channel, but it gets you started on a great platform when it comes to long-term dividend investing. So let's go back and let me kind of clear up a little bit of this screen here. So right here, you can see Discover Financials on the 3rd also paid us technically twice, but obviously altogether it was $3.17. And then right over here on December 8th, we got paid out from Johnson & Johnson for a total of $2.42. And then on the 10th of the month, we got paid out from Microsoft, which I was just talking about, which was a total of $4.23. Now, remember, I just mentioned that my very first payout from dividends on this account was with Microsoft for 3 cents. So in a year and almost 2 years, I've jumped this up to $4.23 every quarter. So that's a huge increase. Obviously, that's me buying more in every single week, and just believing in the company and believing in long-term strategy of what I'm trying to accomplish. Let me clear all this out because there was a lot on there. So the next dividend was on December 11th. Now, Costco technically already paid us just a little bit ago, but this is a special dividend. So if you listen to a previous episode that I talked about, I actually mentioned that Costco was paying out a special dividend. So if you missed out on that ex-dividend date and everything, make sure you hit that subscribe button so you get notified when videos go up, because I'll let you guys know, the dividend dates and when you need to be invested to be able to get those special dividends, or just those regular dividends too when we talk about certain companies. They paid me out $10.75. So they had a special dividend, like I mentioned, where you got paid out $10 per share you had. I obviously had just a tiny bit over $10, so I got that amount coming in, which was a beautiful, beautiful thing. That was honestly really exciting to get that much money from a special dividend. Now, of course, because I am super, super long term, all of this money that I've just gotten paid out from this month has all gotten reinvested back into the portfolio. Now, obviously, they paid out on different dates. So as they were coming in, these three obviously got put right back in the following day. Same thing with these. And then, just the last one right now, which was Costco, I just recently actually had that reinvested. So you can see here on the 14th. So I got paid out, I believe it was a Friday that money came in. And then this got purchased in on the following morning. So this was Monday. So I had technically 5 cents in the account. So I put $10.75, which was mostly from that Costco dividend. And I had it buy into one of my other stocks, which was NextEra Energy, partially because they were down fairly significantly. So I wanted to buy in at a better price point. But then that money is now working for me with NextEra Energy. And then when they pay out their dividend, I'm going to get more money because I have more invested with them. That's how compounding interest works. And that's how people build great portfolios and great dividend, paying out companies that will just increase the amount of money that they have. And like I said, we're going to talk about, how much we need and how much we're going to go forward with getting these dividends. So if I go into here, let me switch my screen over. So this is my spreadsheet that I put together. If you guys are interested in it, I keep sending you guys to the description box, but this is free for you to download in the description box down below. So you guys can definitely check that out as well. So I put this together because I want to keep track of how much I've earned so far and kind of how I'm moving forward as well. So we can see here, I'm going to actually zoom back in again. And kind of like turn this camera around here. So right over here, you can see for December of 2020, right now, for everything that you just saw, I obviously added it together, came out to $27.81. Now, we still got the rest of the month to go, so we're still going to be building this up. And the reason this is important for me to follow is because I like to track a couple different things. One, how much did I do the year prior? Last year, we did 277, so we have a huge increase from the year prior as far as how much we've earned in dividends. And then I also like to look, how much did we earn in dividends in the same month of the last quarter? So it's hard to compare the last 2 months because those are different payouts from different companies, because most companies pay out on a quarterly basis. So I like to look at the month prior to that, which was September of 2020. So you can see right over here, this was $30 exactly. So we're only just a few bucks behind what we made in September, and we still got a couple more companies to pay out, which I'm expecting us to, I believe, go well past that. I think we're going to get closer to like $32 to $34 in dividends. So just in the span of 1 quarter, we are going to have a nice dividend increase. Now, if you look at the total that we've earned so far for the 4th quarter, we've earned a total of $70.06, which when you compare it to the 4th quarter of 2019, blew it out of the water because we had $5.77. And then you can see over here, when you look at the 3rd quarter of 2020, so just last quarter, we earned a total of $63.21. So already $7 ahead from where we were last quarter, plus a couple of more companies to pay us out. So what this is really showing you is that, I am increasing the amount of money that I'm making month over month, quarter over quarter, because of the fact that I'm constantly investing in these companies. Again, I don't necessarily go, from November to December as far as comparisons, or October to November in comparisons, because, the different companies typically follow a pattern of like when they pay out their dividends. So I just go based off of the same month in the quarter for every quarter. So, we look at March, June, September, and December as all similar months because that's when most of the same companies are paying out. And check this out. In March of 2020, I got paid out $4.89 in total dividends. And we're already sitting at $27.81 for December. So that is also going to be blown out of the water. So I can only imagine where, a year from now in, December of 2021, where this portfolio is going to be paying out in dividends if we have maybe not similar growth from the year prior, but like even something substantially close, will still yield some really amazing results because of the way, again, compounding interest works, right? Because compounding works, but we're going to be taking this money that we earn in the dividends and having it reinvested, plus adding more money, and hopefully, keeping track of the companies we're having in our portfolio, but also the dividend increases. Companies that are constantly increasing their price for their payouts on dividends because their companies are growing and moving forward. And those are huge indicators for us to say we're going to be able to hit $1,000 a month in dividends. Or, my bigger goal is to hit $10,000+ a month in dividends payouts, because why settle for a little bit when you can get even more? And I'll show you guys again how we're going to get there. You can see over here that on average thus far for all of 2020, we've been averaging about $13.90. Nowhere close to these two numbers here, but just like you see with a lot of graphs, I'm going to draw a line right here. So a lot of graphs, like they go slowly, and then over time they just kind of like skyrocket upwards. And so like that's what's going to happen with these dividend payouts, and you'll see that here shortly. So yeah, $13.90 is my average for M1 Finance as far as my dividend payouts. I do also have my retirement account. I'll show you guys that in a second. And then you can see here my total that I've actually earned. I knew I had to cut off the screen still. So the $13.90 for the average month is right over here. And then you can see my total dividend earnings so far from M1 Finance that I've officially got paid out. Not all my earned dividends, just the actual paid out ones, has been $175.30. So that's awesome. Like that's a lot of money coming in for us to be able to reinvest. And if you think about that, that's extra money that necessarily I didn't have to be able to get back into the portfolio and work its way up for the long term. Now, just so I can show you guys, I also have my retirement account as well too. So if I go here, this is a total with M1 Finance and my Vanguard. So with what I'm earning together total, I still haven't gotten my payout yet for December when it comes to my Vanguard. But when I do, I will do an update with you guys. So make sure you hit that subscribe. But year to date, we're sitting over $719 in earned dividends, almost $60 on average per month when you break everything down. And a total earnings of almost $1,378 is what we've earned so far between both accounts. And those numbers are just going to keep growing. I have a lot more in my Vanguard since it is my retirement, but long term, this is both of these portfolios are going to do really, really well. And like we were talking about, we're going to go onto trackyourdividends.com right over here, and we're going to use their dividend calculator that they have. If you guys want to check out their website, I'll just have it linked down below for you guys so you can check that out. And then you guys can look at this calculator too. So right over here, what this dividend calculator is going to do for us is going to give us some ideas of where we are projecting to go, because that's really important. So right now our portfolio for M1 Finance is sitting around 18,000. I think it was like 18,300. Let's just do that. Monthly contributions, let's just go ahead and say I'm doing 800 right now. Obviously my hope is to continue to grow that higher, and as we increase our income, we increase our contributions. Annual dividend yield. So this is how much we're earning in dividends based off of what we have so far, and we are at 2.28% dividend yield. And then this right over here, this is the really important part. So dividend growth rate. This is talking about how much we're going to actually have the dividends grow year after year. So to jump around here just a little bit, we're going to go to seekingalpha.com. This is where I like to get a lot of my information from. So if you guys like to check them out, it's a really cool site. So I built up my portfolio. I actually did it twice, but I built up my portfolio here. And if I go into the dividends, what we're going to be able to see is all the different stocks that I own. And I'm going to actually show you here. If I actually switch it over, there was a company that recently announced a dividend increase. I don't remember which one it was. Hold on one sec. I think it was Pfizer. So as an example with Pfizer, or Aflac actually, because I mentioned Aflac earlier, let's just go to them. So as an example with Aflac, if I go to their dividend scorecard right over here, we're going to see that their current dividend yield is 2.94. But what's really important is this next step over here, which is them increasing their dividends. Now, on average, they have like a 7% dividend increase, but just this last year in November, they actually increased their dividend by almost 18%. For a second, I thought it was 17 earlier, but it's 18%. That's a huge dividend increase from one year to the next. And so to me, that is how people are able to grow a portfolio to pay out them dividends in a much larger amount without having to put as much money, because this is where their money is going to be most effective, is because they're increasing it. Now, when you look at, 28 cents originally getting paid 33 cents, dollar wise, that doesn't seem like a lot, but when you own thousands of shares, that can have a huge impact on how much you're actually making. You're making 18% on your money for having that company already. So, when we go back over here and we look at dividend growth rate, we're not going to put 17%. That's not the average, and that's definitely not a norm. I would say closer to 7, 8, 9, 10, 11% is going to be somewhere in that range. In this example today, let's just be a little conservative and say that we have 8% growth rate. I sometimes go a little higher, but just for this one, we're going to just do 8% growth rate. And then it's going to say the annual share price growth. Let's just be a little conservative and say 9% on our money. Typically, I like to aim a little bit higher, but again, these are just examples. And then I'm going to just do 20 years of dividends. So we're going to go ahead and calculate this. And I'm going to show you guys how much of an impact this actually has on us. Let's go ahead and zoom in a little bit more. And then we'll kind of like close this in a little bit. So what we're going to see here is effectively what they're estimating is based off of those numbers, you're going to make about $417 in dividends, right? So not too bad. You have a total of, $18,700 by the end of the year, give or take. Now, if you look at the second year, all of a sudden we're getting almost $739 in dividends, and we're projected to have our portfolio around $30,000. So we're not only increasing the amount of dividends because we care about those, but we're also focusing on growth. So we're kind of tackling two things at once, and that's really important to talk about too. Then if you look at year 3, $1,146 and about $44,000 in total value. So all of a sudden you're starting to see this uptick in amount of dividends. I mean, year 3, this is averaging out to be almost $100 a month in dividends. And that's a huge feat as well to be able to hit, right? $100 a month for having done nothing, right? These companies are just paying you out for having ownership in them. Obviously, you're either doing research or, focusing and paying attention to how these companies are going, but realistically, you're not doing any of the hard work on the back end when it comes to that. Let me go back here to make sure this stays active. So I go back here, and we can see in year 4, and I'm gonna start skipping ahead here a little bit too, but in year 4, we're at $1,600 and almost $60,000 in our portfolio. So let's kind of go ahead and skip down a little bit closer to where we're projecting to be around, $12,000 a year, which equates to about $1,000 a month, right? So you can see here in this example, ooh, that was a terrible arrow. So in this example right here, we're between years 11 and 12. A lot of times when I do these examples, I'm getting closer to about year 9 or 10. But because of the numbers I put in just for today's example, we're going to be looking at year 11 or 12. So in 11 or 12 years, based off of this portfolio, you will be earning pretty much between $11,000 to $15,000, right? And just look at that. Just in the span of 1 year, how big of a jump that is in amount of dividends. But then also look at the actual portfolio amount. Like you're looking about $250,000 to almost $300,000 in total value as well too. But obviously because we like dividends, we're paying attention here. So this right over here, you are hitting $1,000 a month. So if we recall, if we look all the way back in year 3 is when we were projecting to get about $100 every single month. So it took from year 3 to year 11 or 12 to jump from 100 to 1,000. So that's obviously a long time, a lot of dedication, a lot of consistency, because that's a big thing with dividends, is being consistent. So when you look at that stuff, you're like, okay, cool, like $1,000 a month, that was the goal, right? We're gonna collect on that and we're good. But let's say you don't collect on this. Let's say you don't take that $1,000 a month. You can still live off of what you're making. You still want to work, whatever the case may be. Well, let's keep going down on this list, right? So if we go down all the way to year 20, so here we are, year 20, look at how much you will earn in dividends every single year. Almost a little over $109,000 in dividends. Oh, and check out your principal. You're sitting at $1.2 million in your account. Now, obviously, there are different types of investings. People can focus on growth and do a lot more on that end. But if you're somebody like myself who's like, hey, I want to just build an income stream that I don't have to worry about, and I get it, in 20 years, money is going to be worth different things than it is now. But I promise you, I don't think people will complain about, having this money. So you can see here with, 109,000, that's pretty much $9,095 a month on average. Some months are higher, some months are lower just because of payouts, is what you'll be earning in dividends. And obviously considering that this is before taxes, so, you always want to talk to a tax accountant. Dividend taxes are a little bit different, and they kind of favor those long-term investors. So when you look at that, if you really think about it, we were talking about, let me kind of scroll back up here. When you're thinking about year 11 or 12 and earning $1,000 a month, that's a really good amount. But if you wait just again another couple more years, you're looking about $9,000 a month, right? So this amount of time versus, let's say if we go back here to the $100 a month, let's go and draw this out again. So, it took from 3 years to 11 or 12 years to hit 1K. And then from 1K to 9K, it took another 7, 8 years to be able to hit. But I mean, $9,000 a month, even in 20 years, even with inflation, even with everything else, $9,000 a month is going to be a really good, healthy amount. Now, for me, my goal is in about 15 years to be able to utilize whatever I have in dividend income, because I want to be able to enjoy a lot of it. I'm not waiting for retirement on M1 Finance. That's what I have my retirement account for with Vanguard. But right over here, we can see I'm planning on getting $30,000 and being able to start pulling that money out to go on, travel and do a whole bunch of other really, really fun things. Probably still working, but being able to use this money at my own discretion, essentially. So $30,000 a year to be able to spend on travel and stuff is pretty substantial. But the caveat to these numbers, the caveat to the 20 years and earning $9,000 a month, the biggest caveat that some people don't talk about either is the fact that to get to this point, $9,000 a month, you cannot be pulling these dividends out. These dividends need to be reinvested into your portfolio year after year to be getting in there and compounding, right? So once you hit that $100 a month, once you hit the $1,000 a month, you're not pulling that $1,000 a month out. You're just letting it reinvest in your portfolio to keep building up. So that way, 15 years from now, like my goal is, or in 20 years from now, you can hit these really, really strong numbers and then have that money coming into your portfolio every single month or every single couple of days, depending on how many companies you have, and then pull that money out as needed. Now, this is another big thing too that a lot of people don't really realize, because when you think about dividends getting paid out at 4%, that's not a lot of money on your money, but just taking a quick moment to realize that your portfolio in year 20 would be worth 1.2 million and you're getting paid out 109,000. The return on your money is fantastic at this point because you had those dividend increases going up. Same thing with in year 15, getting paid $30,000 a year in dividends and having about $500,000 in the portfolio. That's a pretty good return on your money. Obviously, as you keep going with investments and things keep working out in your favor, that can exponentially grow this, right? We try to be a little conservative with these numbers here at the top. So some of these are, a little bit lower for myself personally, but that can change with, just plugging in different numbers. Let's just say you put in $1,000 a month, right? So just an extra little bit of money, an extra $200 a month. Let's scroll down to the very bottom here. Well, you went from $109,000 a year to $130,000 a year. And then you went to $1.4 million, right? So you see this and you're just holy smokes, just an extra $200 a month is going to have this much of an impact. Now, I know you might be hey, I can't put in $800. That's impossible. You can get started with a lot smaller. Let's say you can do $100 a month. Obviously, your portfolio might not start at 18,000, but it's all about compounding and getting the habits in, because as you get your habits in, then you will start growing your portfolio, right? I showed you this earlier, and I think it's just really important to show. I started my account with $100. That's all. Just $100 is what I put into this account because I felt that was important to just get started. Just putting in this $100 gave me confidence, got me started. I started learning. Look, 2 cents is actually what I earned as my first dividend. 2 cents with Microsoft. And then you saw I earned $4.23 just this last month. So it's all about timing, letting it build, and it will work for you. But if you don't start at all, this isn't going to do anything for you. You're not going to get to, these big numbers here if you don't get started, if you don't put your money in, if you don't pay attention. I think the hardest part for a lot of people is that when they're sitting here and let me go this here. When they're sitting here and they're trying to go through and say, well, I really want to earn that $1,000, but then they look and they are like, oh, well, last month I only earned $30. The month before that it was only $12. I only earned $21 here or $7 there. And then all of a sudden they get discouraged because they're seeing these low numbers when they don't realize that the increases between these months, between the quarter after quarter, is slowly increasing, but the percentage can be huge, right? Like, dollar wise, when you look at how much we earned, we talked about this, right? In December of 2019, we earned $2.77. And then in 2020, thus far, with more to come, we've already earned $27.81. That's a massive increase from the year prior. Percentage-wise, it's huge. I didn't do the numbers or anything, but it's a massive growth in percentage. So dollar-wise, it doesn't seem like a lot. But imagine in 10 years what it's going to look like when we look at 1 year to the next. Because if you recall, just even down here, like look at this. Year 19, we're earning $100,000 in dividends. In year 20, we're earning 30% more. We're earning $130,000. So can you imagine, like, let's just do the math here and do one additional year. So let me do 21. So if we do 21 years, check this out. So the very next year after the 20th year, you're earning $170,000. Like, that's another $40,000 increase. Like, it's really crazy to fathom. Now, again, the caveat is that you're taking this money and you're reinvesting it back into your portfolio. So, you're not taking that money out. You're just reinvesting it to be able to get this number. Because if you take out this $130,000 all the way, right? Like, let's say that year you earned $130,000 in dividends, and you're like, I'm just going to take all this money out. Well, the following year, you're not going to make 170 anymore. You're going to be probably closer to 130, maybe 131, 132,000, because some of the dividends will have their increases, like we talked about. But you won't get to that 170. So, are you willing to, say, I'm not going to take this money out. I'm going to put it back in this account, because then the following year, I'm going to make an additional $40,000 on top of what I already made this last year. And like, to me, that blows my mind, right? To have to like think about those decisions of like, do I want to take the money out now? Do I want to take it here or there? I mentioned that like I probably want to take my money out in year 15 to go travel. Now, depending on how travel works and like what we want to do, I probably won't take out, well, in my earlier example, it was like around 30,000 or so, but I won't probably take all that money out. So whatever I don't take out is going to go back in. So that way the following year, I'm going to have more dividends than I had the year prior, because I got more reinvested into the companies that I have. So, it's all about, am I willing to take the money out in year 15? Or, hey, if I wait another 5-6 years, I can get a whopping $170,000 every single month for investing in the companies that I do. Now, that's a hard thing to think about, because I'm like, well, in 15 years, that's the goal. But then, man, if I just waited a little bit longer, how much more I can have. And like the amount of stuff you can do with $170,000 a year just in dividends, not including any other kind of income, you got a lot of freedom right there. And to me, that's like financial freedom personally. But, that's always a decision for each person individually and what your guys' goals are as well. Now, I want you to keep on watching more content here on the channel, because I think it really helps with getting you encouraged and excited about investing more. So check out that video right over here to kind of go through that process and learn more. My name is Dennis, and I will see you guys in that next video.